Impact of the 2024 general election on stock prices and the Indonesian economy. Elections are one of the crucial moments in the political life of a country. However, how does this general election affect the stock market and economy of Indonesia? Let's explore its impact in this video. Hello, welcome back to our channel. In this video, we will discuss the impact of the 2024 general election on the movement of stock prices and the economy of Indonesia. General elections not only affect politics but can also have significant impacts on financial markets and the economic stability of a country. 1. Market sentiment. One direct impact of the election is a change in market sentiment. Stock markets often react to the outcomes of general elections, especially if there are concerns about political stability or economic policies to be adopted by the newly elected government. The stock market is highly sensitive to changes in market sentiment related to the election outcomes. If there is uncertainty about political stability or the economic policies of the new government, investors tend to become cautious and may sell their stocks to reduce risks. This can lead to an overall decrease in stock prices. Conversely, if the election results provide certainty and investors believe that the new government will implement policies supporting economic growth and political stability, market sentiment could be positive. This can result in an increase in stock prices as investors become more confident to invest in the stock market. Therefore, changes in market sentiment after the election can be a crucial factor affecting stock price movements, as investors respond directly to the political and economic atmosphere generated by the election outcomes. 2. Economic policies. The election results can also influence the economic policies to be implemented by the new government. If the elected candidates have pro-business and pro-investment economic agendas, the stock market may respond positively with an increase in stock prices. This could include policies supporting the growth of specific industrial sectors, incentives for investment in infrastructure, or the reduction of regulations limiting business growth. For example, a new government offering tax incentives to companies to develop new technologies or expand their businesses may encourage investors to increase their positions in these companies' stocks. This could result in a rise in stock prices as the prospects for company growth become more attractive to investors. Similarly, if the new government supports investment in renewable energy or infrastructure sectors, companies operating in these sectors may benefit from the policies adopted. This could trigger an increase in stock prices in these sectors as their business prospects brighten. Thus, the economic policies taken by the new government after the election can have a significant impact on stock prices, especially if these policies are beneficial for overall economic growth and stability. 3. Sector-specific. Some economic sectors may experience greater impacts than others depending on the political agendas of the elected candidates. For example, the energy or infrastructure sectors may experience significant growth if there are massive investment plans in these sectors. 1. Energy sector. If the elected candidates support investment in renewable energy or the development of alternative energy sources, companies operating in renewable energy sectors such as solar, wind, or hydro may experience significant growth. Investors may see bright long-term prospects for these companies and tend to buy their stocks, which could lead to an increase in stock prices in the renewable energy sector. 2. Infrastructure sector. If there are massive investment plans in infrastructure development, such as roads, bridges, ports, or airports, companies involved in these infrastructure projects may experience significant growth. This includes construction companies, building material manufacturers, and infrastructure service providers. Increased infrastructure spending by the government can boost the income and business performance of these companies, which may then be reflected in the increase in their stock prices. 3. Financial sector. Changes in economic policies affecting the financial sector can also affect stock prices. If the new government provides further support for the financial sector, for example, by offering incentives or favorable regulations, banks and other financial institutions may experience positive growth. Investors may see opportunities to profit from the growth of this sector and invest more in the stocks of these companies. Thus, sector-specific impacts of the election results can significantly affect the performance of stocks in various economic sectors, depending on the political agendas of the elected candidates and the policy plans to be implemented by the new government. 4. Post-election uncertainty. However, it is also important to note that the general election can create uncertainty. If the results are unclear or if there are prolonged disputes, the stock market may respond with volatility and a decline in stock prices. 1. Stock market volatility. If the election results do not provide clarity or if there are prolonged disputes, the stock market tends to become unstable or volatile. Investors may worry about the country's political and economic future, leading them to sell their stocks or refrain from investing. This can cause significant fluctuations in stock prices, where stock prices rise and fall sharply in a short period. 2. Decline in stock prices. Post-election uncertainty can also lead to a decline in stock prices overall. Investors may feel more comfortable maintaining liquidity and minimizing risks by selling their stocks, especially if the political situation becomes increasingly unclear or if there is economic instability. This can result in a decrease in stock prices across various sectors and companies. 3. Investment restraints. Post-election uncertainty can also cause investors to refrain from investing or delay their investment decisions. They may wait until the political and economic situation becomes more stable before making significant investment decisions. This can reduce the demand for stocks and cause a general decline in stock prices. Thus, post-election uncertainty can create an unstable market environment and significant volatility in stock prices. This is important for investors to consider as it can affect the performance of their investment portfolios and require wise strategies to deal with it. 5. Conclusion. In conclusion, the impact of the 2024 general election on the movement of stock prices and the economy of Indonesia depends largely on its outcomes and the political agendas of the elected candidates. Investors should carefully monitor political and economic developments and conduct in-depth research before making investment decisions. 1. Watch the election results. Investors should closely monitor the election results as they will provide clues about the direction of economic and political policies to be adopted by the new government. This will affect market sentiment and stock price movements. 2. Analyze political agendas. After the elected candidates, it is important to analyze their political agendas, especially regarding economic policies. If the elected candidates have agendas supporting economic growth and political stability, the stock market may respond positively. 3. Conduct in-depth research. Investors should conduct in-depth research on companies and specific sectors that may be affected by the election results and the political agenda of the new government. This will help them make more informed and intelligent investment decisions. 4. Flexibility and diversification. Given post-election uncertainty, investors should have flexible strategies and diversify their portfolios. Thus, they can reduce risks and protect their investments from sharp market fluctuations. By considering these factors and conducting careful analysis, investors can be better prepared for the impact of the 2024 general election on the movement of stock prices and the economy of Indonesia, and make more accurate and informed investment decisions. Let's enhance our understanding of the impact of the 2024 general election on the stock market and economy of Indonesia by continuously monitoring political and economic developments and conducting in-depth research before making investment decisions. Don't hesitate to discuss with financial professionals or investment consultants for more detailed guidance. Thank you for watching this video. Don't forget to like, share, and subscribe for other content. See you in the next video.